Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, August 18th, 2020. What I'll do in the video is quickly run through the broad markets. There really isn't a whole lot to report there, no major developments today, but I'll do a quick recap, show levels to watch. Trade ideas, I'll do an update on yesterday's CGA trade idea. I want to update that one, and a couple others to watch in the sector. Gold, silver, just hit on those real quick and probably leave it at that. All right, this is the SPY 60-minute chart. Let's start out at the daily chart. I mean, daily, most important level, I think, is this blue uptrend line, and the fact that we are now, if we zoom in real tight here, this is, let me zoom back out first and show you, that's the previous high from back in February, and the market's kind of stalling out here at that. You know, we're still in an uptrend, but prices are compressing. These little candles the last few days as we've been testing that level. So big level. We still have some pretty clear negative divergences down below on the indicator. These are the biggest divergences that we've had in many months. And so that indicates likely trend reversals coming. And I've been saying that for a while. The divergences have been building, but what we're lacking here is a decent sell signal. We've had some little sell signals on the 60-minute charts, but again, nothing on the daily chart. And goes back to really back here where we said we have to break this 318.30 level, and that's still, we're well above that now. So again, let's watch this trend line. 60-minute chart. This is wedging up. We had this wedge right here. That broke and it was clean, one and done, had a sell signal, a correction, nothing big, but a tradable correction. And then we wedged up. So recently, it's just about a week, a little less than 2 weeks ago, pointed out we had a breakdown there. It looked legit, fell to hit support. There was a gap right there. And from there, we've kind of continued to wedge higher in the smaller wedge here. There's still divergence. We had divergence right here. That was a divergent high when that happened. And all that happened is the divergences have now simply extended from there. So this uptrend line doesn't have a ton of reactions, but that may do the trick to trigger the next tradable correction to any or all of these levels there. That's what it looks like on SPY. Of course, until tech breaks, the market won't break. In Qs, which is the tech heavy index, QQQ still remains above the primary uptrend line without any sell signals on that, on the especially on the daily time frame. That's what I'm looking at here. I'm toggling back and forth between 60-minute and daily charts. So we did have some short-term sell signals recently on the 60-minute charts. We'll look at those, the futures, in a second. That's where I was mainly focused on. IWM, let's zoom down to a 60-minute chart. But before we do, IWM on the daily time frame, has stalled out just shy of this 160, 63-ish resistance right there. That was really the level. Once it broke, it was support there, and that started the waterfall down into the March lows. And like everything else, the small caps, like the large caps, big divergences building that indicate a significant correction, just like we had negative divergences leading up to that high right there, really about an equal high. That's where the divergences started to play out right here. And these lines are distorted because of the big drop. When you have such a big drop in price, it's hard to really make out what the those momentum indicators are doing. But you can see when I do this now, you can see those divergences pretty clear once you take away that big swoon down in the PPO and the RSI. There it is. There's your divergence leading up to that big drop. So like I said, it's not 100% that divergences will play out for a trend reversal, but it's darn close to it. It's the majority of the time, well over 50%. Just trying to put my line back to where it goes. There we go. Having a little trouble with that. Yeah, that did it. Okay, let's look at the futures and we'll move on. Since I'm on the small caps, we'll just start there. So RTY, we triggered a sell signal recently on a break of this price channel here, 60-minute chart. We had nice clean divergence. I like looking at these futures because it's going to show you round-the-clock trading. And again, we're in an uptrend. There's no arguing that. But along the way, there's plenty of these pullback trading ops that are good for anywhere from usually 4 to 7, maybe 8% or more drops in the small caps. And so there was our sell signal when we broke the trend line, and we've been bouncing along this 1570 support. And actually now I could even add another line. We're kind of capping out right below this about 1590 or so right there. Seems to be pretty tight price compression, a little sideways trading. We've had a few, dips below that 1570 level. Nothing very impulsive in both of those. We snap back above. So that's the level I'm watching. If and when that goes, I believe we'll come on down here to at least, at minimum, this 1536 target, and quite likely that 1494. And maybe that's it, like these other corrections, that would be in line. This one here was about a drop of, what was that, 7% or so, maybe a little more, maybe something like that. But remember, the bigger picture on the weekly and daily charts, you have those divergences that have been continuing to build. So one of these little, seemingly little pullbacks may morph into something more. But then that's where we turn our focus back to the daily charts and we watch those uptrend lines there. All right, NQ, NASDAQ 100. Again, nothing to report. Same old, same old. We had a divergent high, and we did have, this is that sell signal recently. You had a pretty significant uptrend line. Broke down, moved down, and we pushed up now, made a marginal, meaning a slightly higher high, and it's only kept those divergences in place and made them larger. So in other words, the same divergences that were in place here at this high that led to that. That was more like the shot across the bow, the initial drop. We had a kickback right here, then a bigger drop. And you get that here too, a series of divergent highs and culminating in one larger divergent high and then usually a bigger drop there. So, that's what it looks like is coming here. Price levels, I have so many lines here, but the first early signs of a sell signal will be a drop back below. This is support around 11,274. And then I think this trend line will also be significant right here. Let me color it up for you. I know I have so many lines on this chart, it might be difficult, but right here. And that goes back from, looks like the late June lows, reaction low. All right, ES. ES are your S&P 500 E-mini futures. Here's a trend line to watch right now. Comes off this low here from also about late July right there, and looks pretty well defined recently. A lot of reactions, same story. You can see, or pretty much like I said on the S&P 500, flattening out, and that level is at about 3381, give or take. But you have the trend line just below, so. It feels like market just needs a little nudge to get that sell signal to see both NQ and ES solidly take out those levels, as well as RTY, the small caps, so it can break that support. Now, the small caps aren't going to really lead the large caps, usually the other way around, but sometimes they can do their own thing, and quite often it'd just be better to see all the indexes break down. The more technical levels that are broken on the various indexes, sell programs hit, stops are hit, and then that can trigger a pretty swift move down. And that's the thing about trading these pullbacks. You got to be pretty quick in and out. And again, bigger picture stuff says, we'll get one of these breaks and it may morph into something more. But there's your first target, 33.35. 33.25, excuse me, and then 32.82. And we'll see. Let's just see if we get the sell signals anytime soon, and we'll go from there. All right, let's turn our focus to the pressure. No, let's look at trade ideas right now. Let's do that. Let's go revisit that CGA. That was yesterday's, added as an official trade. Down today, so I want to talk about that one. So down today, what happened, what didn't happen? Well, nothing technically significant has happened. Yes, I mentioned usually when this thing starts to run like this, you have some pretty fast move until your targets hit. So I still expect T1 and quite likely T2, especially T1, to be hit in relatively short order. But when you examine these previous rips that I highlighted in yesterday's video, you can see a rip here, a rip here, a rip here, all good for, I think I said it was about 60 to 100% plus moves if I recall. But if you examine those closely, let's look at that. It's not all green candles. You're going to take a breather in between. So there, for example, there was a red candle from high to low. In other words, once this thing started ripping, your biggest move was right here on about day 3 of the rally. And then the next day it pulled back 26%. So as I said, this thing moves. It's low priced. It's thinly traded, And that is the nature of this beast. And I always say you need to know your security when you're trading something. And so if the 7% pullback, and it was down more at the at the lows today, if that doesn't mesh well, if that's just outside your comfort level, then you're trading the wrong stock, or you're trading too large a position size. Little, sprinkle little bets on these speculative trades. Don't put a lot of money into it. Don't put what you'd put into SPY or Apple or Microsoft, because you don't need a lot of money if the target's hit. If we go up and hit our, let's say, our second target, you're looking at about a 75% return or so from roughly from where it was entered. All right, so that's that. I just wanted to point out those, you get those pullbacks. They are normal along the way. In fact, almost in every instance, this one you didn't get it till the run was over. This one, no, you had it when the run was over. But this one, there it is right there. I'm going to have to zoom in for you. I know in the video it's hard to see this. There's another example right there. And this was nice because it was a pullback to support as well. And that's what I need to jump back to today's pullback, which also came just above support. So there it is. You had a big run up. There's your red candle. That's a sharp drop from the highs of the previous day to the low. It was about a 23% drop. To the close, it was about a 20% drop. And then from there, turned around, picked up the next few days, and rallied up another 56%. So, point is, this trade will either work out or it won't. Like any other trade, it's either going to work out or it's not, and that's what stops are for. I'm going to draw a potential uptrend line here, but I wanted to point out that we pulled back to just above the trend line. We didn't quite hit it, but it's also not super well defined. You had some reactions through there. I think that's close enough. And we came pretty close at 309 former resistance. That was a breakout point. Now we could come back one more day. If we did, it would be an objective add-on up to, but not below that level. So up to about 310 or so. And that'd be only about another, from where we closed, to be a little more than that. But about 3-4% below today's lows, maybe another 6% downside tomorrow. But I do still favor this one resuming and picking back up. Again, that's just the history of the stock. Normally when you see a candle of this size and the volume coming in, there are follow-through buyers coming in right after that. I struggle to go back in this chart, just eyeballing it, seeing a candle this large on such high volume where there wasn't additional upside. So I just wanted to bring that up for those in it, that hey, still looks good to me. It's, you don't always get consecutive green candles all the way to your targets hit. All right, and in that sector, before I leave it, some of the ones I want to continue to keep an eye on are IPI. It was up nice today. People love these stock splits. Think they're getting a better deal on the stock, and it's financial engineering. I had a 10 to 1, 1 to 10, 1 for 10, or 10 for 1 stock split recently, and so that makes the price. Actually, there was a reverse split, I should say. So take back everything I just said. It was a reverse, not a regular stock split. But either way, it's brought in volume. So whatever they did, they like it. And probably got it away from that low price. See, people avoid, and that's why companies will do reverse stock splits. They don't want their stock price low. People think, what's wrong with this company? Even if it's not trading below a dollar, if it's, in this case, it would have been about $1.30, right? It was a 10 to 1 reverse split, and it's at 13.23 now. So yeah, you get close to that dollar range, and you also face a delisting notice. If you trade, if a company's stock trades under $1 for too long, they'll get a notice. If they can't get it back up there, they get delisted. So anyway, so that's whatever the reason is, and they like that, and you can see a lot of volume coming into the stock recently. But at the end of the day, no buy signal. I'm still waiting for a pop. It needs to take out 1428 with conviction, and if it does, I think it's smooth sailing. Very little resistance up until about that $21 area, and that's about a 46% return, and then maybe up there. So again, I've covered this recently, so I'm not going to spend that much more time on it. And I'm keeping an eye on some of the others in the sector, including RKDA. If it can get back above that 344 level soon. Again, lower priced stock, has the potential to run, and again, just one of several in that sector I'm watching. Okay, gold and silver up a little bit today. Nothing huge. bigger picture on gold, and that really is, a big driver of my analysis right now. We had this top back in 2011, the end of the last bull market there, and that's what we're testing. We've been testing that now for weeks. I'm going to scroll in, zoom in here. That's roughly, not exactly, around 185, almost 186. We'll call it 186. So 4 weeks ago, the week ending July 31st, we first hit that level, got checked, popped above it, and then closed a little bit above it, but then back down below it. The following week, we're still right on it. This week still has several days to go, and so for all intents and purposes, we're not above it enough to say that that level's been taken out. So this is what I define as a reaction. A reaction is either a pullback, and when you're rallying, when you're in an uptrend, you hit resistance, you either pull back or you consolidate. So far, it's been a consolidation around that area, but as I mentioned, there's a lot of factors, such as the divergence down here on the weekly chart and everything else that say likely get a deeper correction. And I'm still longer term bullish on gold, just near term bearish, looking for a pullback. Come and test this uptrend line, possibly. We did hit a minimum target, which was a backfill of this gap right here. Maybe that's it, and if it is, and we happen to thrust up again, the upside's probably going to be limited, I think, because that's really not a lot to work off the overbought conditions. Here we were overbought, and you can see we had a nice correction both time, more so in time, but a little bit in price. A couple months actually to work off the overbought conditions. Overbought there, and we had a nice correction in price. Overbought, overbought, overbought. We almost hit it there, almost hit it there. We did hit it there. So you can see, that's the history of, of gold. You get overbought, and doesn't mean you can't continue to go up, because sometimes, especially in a bull market, overbought can become much more overbought or stay overbought for an extended period of time. But same thing on silver. You can see my arrows down below, or the circles. This is an extreme overbought reading. Higher than that. In fact, the highest one since the last bull market, all the way back in 2011 when silver topped. And obviously, I don't think this is the end of the bull run in silver. I think it's a correction's coming, and there'll be more upside in the longer term. But again, when you look and play the odds, just put the arrows at these overbought readings and see what happened since there each and every time. It's just not worth it from a risk reward perspective. I mean, before all said and done, that now these were bear oversold readings in a bear market, so you're going to get deeper corrections. I'm not looking for this. Hey, anything's possible, but I'm only looking for somewhere along this to this is the most likely and probable scenario. Possible if we get down all the way back there, it would be a nice objective entry if the charts confirmed it, and we'll see. But as of now, like I said, I don't think this is enough to really work off the overbought conditions. And here's an example. I want to just point this out about overbought. See, we're overbought back in 2000 and early 11, and stayed overbought for a while, so we kept going up. Then the overbought conditions set in the form of a correction, and that correction, it doesn't look like much here because we're looking at a long-term weekly chart, but it was about 15% right there. And what that did too, so that helped to work off, or at least temporarily alleviate, the overbought conditions. See, it took us back under the RSI. 15% drop, and it was a textbook bull flag pattern. This is a flagpole, an impulsive move up, followed by flagging action, and then you take the distance of the flagpole, add it to the bottom, and that's what it was. So there is a bull flag on a weekly chart that played out perfectly. But again, it was a 15% correction that lasted, and it was in a strong rip-roaring bull, and it lasted several weeks, probably a couple months there. It looks like maybe 5-6 candles. And so far, we haven't had much of a correction in time or price, really. So that's that. Just jump down to a 60-minute time frame and look at silver futures SI. Here's what I'm watching now. I have a new trend line here and a little wedge pattern. There's your divergence on it, at least on the PPO down here. So here was our sell signal recently on silver. We had this trend line break, little kickback rally, drop. Overshot my 24,573 target, but undershot my 22,565 target, somewhere in between. And so far we're stepping lower, but we need to break this line to go on down. If we do, we get those sell signals, break this, especially this 26,417 support, we should go down, hit that next target, and possibly my final near-term swing target here, this uptrend line and support zone down here. So looking for a move down to this level right now. Still favoring that. Gold futures, if you're trading gold instead, there is additional level I added. I had a, last week I think it was, I had a bounce target zone between here 1952 and at 1997, but there is some minor resistance right here at about 2030 or so on gold, and that's about where we're at today. So that's what it looks like on the 60-minute charts, and again, target zone if and when we get here. I think that'd be might be it, and I think we'll have certainly done enough to help work off those overbought conditions. It's not to say we can't go down more than that, but that's somewhere that I think is a likely target. And we could also draw a trend line this way and say, there's a trend line to watch on gold, GC. And the gold mining stocks, GDX, we had a nice clean sell signal, gap down and breakdown below the this clean wedge pattern here. There's your uptrend line, breakdown, kick back for a near back test now of the wedge or trend line from below. So that's that on GDX. This trend indicator, the PPO, is still bullish because that white line, the 9 EMA, is still above the 0 line. That's your longer term trend indicator, but again, we had a pretty powerful divergent high right here, and if that plays out, which I'm still leaning towards, I think we see more downside in GDX. Probably down here, let's current max target, let's say right now about, I think I had that before, about 31, 33. So that's what it looks like in the miners. Nothing big, but they were down today. You notice that, silver and gold were up, yet the miners are coming under selling pressure. And then finally, to just wrap the video up, I'm going to rifle through these very fast, just show you kind of what the big, the components of GDX look like. This is Newmont Mining, NEM, one of the largest miners, and you can see a similar story here. You have negative divergence here on both the PPO and RSI, or you did at that recent high. There's a trend line. I'm not super crazy about it because I have to exclude all this, that big drop, that meltdown into the March lows. But enough reactions, I'm going to leave it there and say that needs to go. So here's a common theme as I go through these, and you can see that would be a swing target if that trend line goes about 52.43. As I run through these, there's a couple in that watch list that are not not gold stocks. They for some reason have some other companies. Here we go. This is also a component of GDX. RGLD, Royal Gold. So what I'm seeing is a mixed bag. A lot of these miners broke down pretty clean uptrend lines, wedge patterns, following divergent highs, everything else. And so you have a breakdown, a backtest, like GDX. Also have price resistance. So as I'm going through this, of these, if you're of the mindset that the miners have more downside and gold and silver have more downside to come, that they've run into resistance, and we just saw the first wave down in a deeper correction, this one looks better than a lot of the others right here, Royal Gold, because you have, at the very least, it's an objective shorting entry. Short entry because you have price resistance there about 138.86 plus a back test of the wedge. Problem with back testing is you can continue to back test even if you are going to roll over, but the fact you have price resistance there as well. And again, you can see we had a major reaction high here, several attempts to take it out, reaction high there. We had a breakout there, but it proved to be a failed or false breakout. And so that would be, again, objective short entry with a stop not too far above, offers an attractive risk reward for a move down to at least, I think, well, minimum 120.84 and maybe 113. So I'm not going to go through each and every one. It'll take too long. I'll wrap the video up here, but I'll just rifle through some of the other miners here. And it just paints the picture that some of these I have above trend, but most I have a common theme of negative divergence as they continue to wedge higher and are quite overbought. Here's one that's broken down, so that's it. So you either have them, quite a few broken down, or you have them the rest above trend. So you can see that was WPM a minute ago. This is PAAS, Pan American Silver, clear breakdown, well below trend. AU, clear breakdown of the trend line, hit the first target already, 27.87. So again, this coincided with when we hit gold and silver, hit those targets and support levels, last week. And I said, favor a bounce. that's what's going on there. So this is in line. The bounce has gone a little higher than I expected on gold and silver, a little bit above my upper bounce targets, but not too much really to really change anything, especially when you look at the long-term charts. BVN's been strong, but also look at this coming up to pretty big resistance. So it's kind of, again, painting the bigger picture for these mining stocks. HL had a trend line here, I guess a resistance level. I don't have this chart marked out much. One thing that stands out to me is it, let me grab my drawing tool here. Looks like it had a move up here with a little bull flagging action, and pretty much played out to its measured target. Doesn't mean it can't go higher than that, but we're getting very extended on this one, meaning overbought, like everything else. So the risk reward's just not looking so hot right now. BTG, B2 Gold Corp. There's another one, breakdown, back test, and look, a pretty impulsive rejection off the back test today. It's down 6.5%. Needs to take out this 630 level, and that would open the door to either of these next targets, 570 and 488. GFI, there was your uptrend line, broke down, hit first support target 1173 and bounced. AUI broke down, back testing both trend line and price resistance at 634. CDE, divergent high, negative divergence, and really no break of support yet, still above all the trend lines, everything else. IAG, solid breakdown, impulsive. So that's it. So you can see as I'm going through this, kind of a mixed bag where some of these I've had breaking down and having a little kickback rally, and others that have yet to break down. Like SSRM, boom, breakdown, hit that 1932 target, bounce. Right here is resistance because you have a gap right there. Bottom of that candle is a big gap, and that's where we rallied backfilled the gap today. So here's another one that offers an objective short entry. Ideally, I'd like to see it turn down now. Let me take that line away and give you a price line. Here we go. Additional resistance level I just wanted to give you right there, 2243. AG First Majestic broke down after that divergent high right there, broke the 1276 price support level, triggering a sell signal, and hit trendline support almost perfectly, bouncing back to that former resistance. Once broken, or support once broken becomes resistance. So, and it's also backfill of that gap, or near backfill, hasn't fully backfilled it yet. Could push up a little bit tomorrow and do so, or anytime this week. So there's another one that, and it put in that divergent high. So really, it's either going to go up and, and a lot of these maybe go on, extend the divergences, continue to become overbought. I could certainly see that. It's not my preferred scenario, but I can see that happening, or go on and break down. So what we'll watch is all these trend lines I gave you, either the ones that have already been broken, you want to see back tests on those, you want to see rejections off those levels, or rallies back into a gap or some other price resistance and a rejection. Or for those stocks that have yet to break down, like this one, well, it broke that 1276 level, but now this is the blue line, let's say, level that I'm watching for breakdown. So that's what it needs to take out. And that's it. Same story on a lot of these, just divergent highs, summit support, trendline support, or price support. And so that's it. So if we can see these stocks that haven't broken support yet, like FSM, trendline and price support at 590 break support, that's going to open the door for a bigger correction. And on that one, that would be a drop of from here about 38%. Certainly a possibility. And I'd have to sharpen my pencil on this one target wise, but because that's an old line I've had for a while. Let me move it up there. 419, I think that's a little more accurate for that support level and potential target. All right, I'm going to wrap it up here, get the video out to you guys, and if I see anything interesting come across tonight or tomorrow, I'll certainly get it out to you. Otherwise, let's just watch these levels especially on these 60-minute charts of the indexes and gold and silver as well. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.